So you're looking at bankruptcy versus a consumer proposal in Canada. I know that sounds like a huge, stressful decision, and it is a big deal, but our goal here is to break it all down in simple, clear terms. We want to help you understand your options so you can feel confident about the path forward. All right, let's dive in.
Okay, first things first. If debt is causing you stress, please know you are absolutely not alone. So many Canadians are feeling the pressure right now with the rising cost of living and household debt. Just by being here and learning about your options, you're taking a really powerful, proactive step, and that's huge.
So here's what we're going to cover. We'll start with why you might be feeling stressed, then look at the two main formal debt solutions. We'll compare bankruptcy and a consumer proposal side by side, talk about which one might be a better fit for you, and finally, what you can do to take action. Pretty straightforward.
All right, let's get into the foundation of this. It's really important to get this one key thing. Both bankruptcy and consumer proposals are formal legal processes. Now, legal might sound scary, but what it really means is that they're governed by the Canadian government. They're structured, they're regulated, and they're designed to give you a safe, clear path out of debt.
And the person who guides you through either process is called a licensed insolvency trustee, or an LIT for short. Now, this is crucial. They are the only professional in Canada who is federally licensed to handle bankruptcies and consumer proposals. Why does that matter? It means you're protected. You're working with someone who has to follow strict government rules, and even their fees are set by the government, so you know there won't be any surprises along the way.
Now, here's one of the biggest, most immediate benefits you get with both of these options. It's called a stay of proceedings. Sounds technical, but what it does is powerful. The moment you file, this legal protection kicks in and instantly stops all those stressful collection calls. It stops wage garnishments. It stops most lawsuits. It's designed to give you that breathing room you need right away so you can focus on the solution.
Okay, so now that we've got the basics down, let's get to the main event, comparing bankruptcy and a consumer proposal directly, side by side. So, at a really high level, you can think of it like this. Bankruptcy is kind of like a fast, clean reset. A consumer proposal, on the other hand, is more like a negotiated settlement. You're making a deal with your creditors to pay back a portion of what you owe. The biggest difference is at a glance. In a proposal, you keep all your assets. In bankruptcy, you might have to give up some things. And with payments, a proposal gives you a fixed monthly payment, while bankruptcy payments can actually change if your income goes up or down.
Okay, let's dig a little deeper into these differences. First, payments. In bankruptcy, your payment is based on something called surplus income. It's a government formula. Basically, if you start earning more, your payment can go up. A consumer proposal is totally different. You get one fixed monthly payment that never changes. Super predictable. Now, for the timeline, a first-time bankruptcy is usually quicker, maybe 9 to 21 months. A proposal can stretch up to 5 years. But, and this is a big one for a lot of people, assets. With a proposal, you keep everything. In a bankruptcy, you might have to sell certain non-exempt assets. And finally, the impact on your credit. A bankruptcy sticks around on your credit report for about 6 or 7 years after you're finished. A proposal? It's gone just 3 years after you finish. That can be a really big deal if you're hoping to rebuild your credit and, say, buy a house down the road.
All right, that's a lot of information, I know. So the big question is, which one of these actually fits your life? Let's walk through a couple of really common scenarios to help make this feel a bit more real.
Let's start with a really common one. What if you're a homeowner, you've got a steady job, and you've built up some equity in your house?
Well, in this kind of situation, a consumer proposal is very often the best fit. Why? Because you get to protect your home and all that equity you've worked so hard for. Plus, that predictable fixed payment is just so much easier to budget for when you have a regular income. A proposal is really designed for someone in this exact spot. Someone with a steady income who wants to protect their assets and owes less than $250,000 in unsecured debt.
Okay, now let's look at the flip side. What if you're renting, you don't really have any major assets to worry about, and maybe your income is a bit lower or not as stable?
In this case, bankruptcy might actually be the most direct and effective path forward. It's all about getting the fastest financial reset possible. See, if you don't have those non-exempt assets, then one of the biggest drawbacks of bankruptcy just isn't a factor for you. And if your income is below that government surplus level we talked about, your payments could be quite low. It just gives you a really clear, fast end date so you can start rebuilding your life sooner. Okay, so maybe one of those scenarios really clicked with you. Or maybe you're somewhere in the middle. Either way, just knowing this stuff is one thing. Turning that knowledge into action is the next step. So let's talk about what that path forward actually looks like.
The process is probably a lot more straightforward than you imagine. It really boils down to 5 steps. It all starts with just talking to a licensed insolvency trustee. That first consultation is key. They'll look at your specific situation and actually show you the numbers, what a bankruptcy would look like for you and what a proposal would look like. Then you get to choose the path that's right for you. You'll have some duties to complete, like a couple of credit counseling sessions, and then you finish and you start rebuilding. That's it.
Now, just a quick but important note before we wrap up. Everything we've talked about here is for general information. It's meant to help you understand the landscape, but it's definitely not a substitute for getting personalized advice from a qualified professional who can look at your unique financial situation. Our whole goal today was just to give you a calm, clear overview of these options so it all feels a little less overwhelming. If you feel like you're ready to explore what this might look like for you personally, a really good next step is to visit Canadiandebtrelief.ca. You can see if you qualify for a free, totally no-obligation assessment. It's completely confidential, and it's a great way to get honest, real guidance for your specific situation. Thanks so much for your time today.